All right, thanks. Okay, well, welcome to today's session on managing finances during a crisis. Many of you, if you've attended these meetings before, you may have seen my face in the past or even on site. Back when we used to visit on site, my name's Michelle Crocker. I work for KeyBank, and I am here with my colleagues to talk a little bit about managing your finances during a crisis. What's different now? Is managing your finances different, or is it the same? So we're going to kind of go through some tips and tricks, things that we've learned along the way, and provide you with some additional resources where you can find information about topics as well as information if you need help. So a little bit of background on me. I've been with KeyBank for about 8 years. I've been in banking for a little over 20 years. Time flies when you're having fun, but my job at the bank now is really just to provide financial education to the companies that we work with as part of our Key at Work program, and also facilitate if anyone is looking to have a one-on-one conversation with a banker. We do provide that as a free resource for any employee of the Maine Veterans Homes. And we can schedule those appointments either via a Zoom call like this, where it's one-on-one and it's confidential, and we talk about your goals, as well as we can also schedule in-person meetings at a KeyBank location following CDC guidelines. So with that, I'm going to introduce my colleague, Nikki Shaw. Nikki is one of our bankers. She's in the Augusta market. And for purposes of today's meeting, if a Zoom meeting is requested, we'll just funnel all of that through Nikki, since you will have seen her face and heard her talk. But if you're looking for something in person, we can coordinate that as well. But Nikki, I'm going to go ahead and turn it over to you for an introduction.
Okay, hi, I'm Nikki. I know you can only see part of my face today, but I've been with Key for, goodness, just I think over 3 years. I've been in banking a little longer than that, but it's my job really to kind of be here with Michelle and be the face of the branch in Augusta, so that if you need any help with anything, you have a familiar face and voice that you can reach out to anytime, and I can be there to assist you.
Great, thanks, Nikki. And I love your mask. It's
Thank
cute.
you.
I've been wearing the standard red one, but good to see you're following the guidelines.
Yes.
And so my information is listed on the screen, as well as Nikki's, but you'll also receive the materials as a follow-up to this call as well. So feel free to reach out with any questions or concerns. The hope is that today's meeting will be interactive. So you will have the ability, we're kind of a small group today, so if you have a question, feel free to unmute yourself and go ahead and speak up. Also, if you are not comfortable, speaking up with a question, feel free to utilize the chat, and I'm just going to put a test chat in the chat box for those of you that, I apologize, my dog always barks this time of day, so sorry about the dog barking in the background. But if everyone could see the test chat that I just put in, that's where you can go ahead and put your chat comments. If you chat with everyone, the entire group's going to see your comments. If you would like your question or your comment to sort of be anonymous, feel free to go ahead and choose my name or Nikki's name, and we will share your question anonymously. So feel free to put your anonymous questions in there as well, and we'll be monitoring the chat throughout the meeting. So managing your finances during a crisis, I think we would all agree that we've been through a crisis, or we're going through a crisis at this point. We're sort of navigating through this crisis. And so what we wanted to talk about today is, how are things different? First and foremost, before the crisis even happened, we recognize that money is a significant stressor in people's lives. So anything that we can do to help you alleviate some of that stress, we definitely want to accomplish through this meeting. But as you can see, there was a recent J.D. Power survey done. It's probably done around April timeframe, and it reported in that survey that 84% of consumers were somewhat to very stressed about their financial situation. So if you're feeling stressed, you're not alone, and stress can come in many different forms. It can come from the person that maybe isn't sure how they're going to manage their budget from week to week, to the person that was 2 years from retirement and all of a sudden world turned upside down when the market started to become a little bit more volatile. So stress can happen whether you're in a good place or you're in a bad place. Anytime there's change, that can create some stress. So again, hoping we can help to answer questions or alleviate concerns that folks may have. So we are going to talk about setting a budget. We're going to talk about savings. We're going to talk about managing debt. And we do have some future sessions that are going to go into even more depth on these topics. But today we're going to just kind of give a high level, as well as protecting yourself from fraud and identity theft, and some resources that you can access or things you can do if you are experiencing a financial difficulty. So starting with setting a budget. So setting a budget is setting a budget, right? It doesn't really change in times of pandemic, but the information in your budget could be completely different than what it was 60 days ago, 90 days ago, 12 months ago. So if you are someone that has always had a budget in place and has felt really good about your budget, I would encourage you, if you haven't looked at your budget or reevaluated your budget in the last 60 days, now might be a time to take a greater look at your budget. So, budget basics, budgeting 101 basics, you look at your sources of income. And so for a lot of us, our income has really changed during this time. Some folks would, raise their hand and say, I have more money now than I had prior to the pandemic because of some additional programs that were being offered through companies. Sometimes I've seen hazard pay, I've seen extra unemployment benefits. There's been a lot of situations where folks are actually have more money than they are used to having, and you don't want to fall into the habit of getting used to having that money and then not being able to manage once that money goes away. So really being able to leverage that money. Second scenario is, maybe you have had a reduction in income and you have, had to, have a little bit of a tighter rein on your money and really keep a closer track on your spending. I would say I fall into this category myself personally. Before the pandemic, I was on the road. I was getting paid mileage. I had a third paycheck coming in every month. I've been, since the pandemic, sitting right here in my kitchen, as you can see. And so there's been no mileage reimbursement, no extra income. And so that was an adjustment for me. But as part of that adjustment, my expenses also changed. I wasn't putting gas in my car. I wasn't buying, the drive-through meals, going from one meeting to the next. So I really, even though it wasn't a significant reduction, I did have to reassess and reevaluate what was coming in, what was going out, and does it still make sense? One of my colleagues shared on another one of these types of calls that she was now buying a lot more groceries because everybody was home, right? So the grocery budget had to go up, whereas we had to make some changes in other areas, as well as, the electric bill might have changed. If you're home and you're running the air conditioner, you might have seen a spike in your electric bill. So that's another thing that we have to kind of plan for. So we have some worksheets here at Key. We have some technology that you can leverage. We also have some simple, pen to paper worksheets. If anybody would like those, please reach out to me. Please reach out to Nikki. We can get you those resources and help you to really ensure that your budget today is on track. And it's probably going to change. It's probably going to change, again in 2 months and again in 2 more months. And then we're going to be dealing with the holidays and the budget changes then too. So it's a living, breathing document. There is a great article that's referenced on this slide. It's called the 50-30-20 budget. So I'd encourage you to look at this once this information is distributed. And really the 50-30-20 budget is when you look at your take-home pay, to kind of assess if you're in a good place with your budget, 50% of that really should be dedicated towards the necessities, towards the things that you have to sustain your daily life. So your payments to keep your credit good, minimum payments on credit cards are part of that 50-30, the 50% of the budget. Groceries, we've got to have groceries. We have to have our necessities. And for some folks right now, a necessity might be paying the internet bill if you're working from home, or if you have kids attending school from home. That might be a necessity that might not have been a necessity in a previous budget. Netflix also might be a necessity just to kind of you know keep your sanity and separate your work-life balance. So you're going to decide what are the true necessities that you have to have, and that's at 50% of your budget. The remaining 50% is broken down into 30% would be your nice to haves, the things that your extras, the things that you can maybe live without if you have to, but it's the tub of ice cream in the grocery store. It's an emotional thing that you might want. That's part of your 30%. And then the other 20% is going to be dedicated for either savings or paying down extra debt payments. So if you look at your budget and it kind of falls in that 50, 30, 20 range, you're in good shape. And again, if you need help with that budget, we're more than happy to help you. Nikki, what have you seen? You're out there with talking with clients every day and helping them with their budgets. What types of things have you seen, changes that people have made recently with their budgets?
I think a lot before, not many people were home as much as they are now, like you said. So especially not used to being home every day, which, they're eating more at home, which on one sense they're saving because they're, not going through drive-through or getting Dunkin' Donuts every morning. So they're spending, I wouldn't say necessarily spending less because they're spending more on groceries because they have more people home with them. So a big thing that I usually do is, make everybody put pen to paper, make a list of where they're spending their money or where they were spending their money before COVID happened, what they felt like was a want versus a need versus what they're spending their money on now. I've had a lot of people look at things and say, okay, well, recently, so people aren't really going to the gym right now. And they're paying for, anywhere from $20 to $50 a month on a gym membership that they can't use. So a lot of those people, it's just kind of talking them through it and saying, okay, well, call that gym and see if they can freeze your membership, see if you can put it on hold somehow so that you're not having that added expense that you can't take advantage of at the moment. So things like that they don't always think of because they're not really looking at it or they're not used to looking at it.
Great. That's good advice. Thanks for sharing.
Sure.
Any comments or thoughts from the group? You can feel free to put comments in the chat. Has anyone else done anything differently for the greater good that they'd like to share as far as creative budgeting strategies? All right. Well, feel free to type in your comments. I'm going to move on, but we'll get back to those in just a couple minutes if we have some. So the next thing to talk about is savings, right? Sometimes I can almost see people's eyes rolling when I'm talking about savings and I'm presenting this information. You're probably thinking, Michelle, we're talking about a pandemic, we're talking about budgeting, we're talking about cutting back on expenses. How do you expect me to save in this environment? And so, as I mentioned before, there are folks, and you might be one of them, that actually got some extra income during this time. And so setting yourself up for success for a future event is very important, or even just a delayed event. I mean, I've talked about in my role, it's great that we've been able to adapt and pivot to this virtual environment. But there were a few minutes there where I thought, how am I even going to have a job after this is, all said and done? So it can be scary. And so being able to have that savings in place and pay myself as part of that 20% of my budget for savings has really, sort of opened my eyes that maybe I do need a little bit more for savings. Some best practices when it comes to savings are looking at what a true emergency might look like for you. An emergency for me is going to look different than an emergency for Nikki, and it's going to look different for everyone depending on where they are in their lives. So we usually will make a recommendation for savings based off of things like, do you own a home? Do you own a car? I had an emergency savings event during this pandemic where my dog had to go to the emergency vet. That was a huge expense for me. So planning for those types of things is very important. But when you can create savings as part of the overall budget, that's when it can really happen. I know the stimulus checks came out earlier this year, and we were really encouraging folks to save that money. If you weren't experiencing a hardship, if you weren't experiencing a reduction in income, anytime you have overtime or extra income, that's a great way to kind of slide some of that money into savings to create that little bit of a cushion for next time around. We're going to talk about managing debt in the next section, but sometimes if you don't have that safety net, if you don't have that emergency savings, it is important to sort of put those extra debt payments on hold for a little bit so that you can create that cushion for yourselves, so that you're not stressed if you don't feel like you have enough savings in your savings. We always encourage people to don't stop contributing to your retirement accounts. So your option of, voluntarily contributing to your 403b, if you've been contributing to that, don't stop contributing to that. Actually, when the market's down, that's a great time to be contributing because it's sort of like buying investments on sale, because they will appreciate if the markets do what they always do. So keeping contributing to those retirement accounts. Now, if you have a situation where you're like, Michelle, I can't save, I actually need to tap into my retirement savings. It's I'm really feeling some financial stress and I really need to be able to access those resources. You may be aware that the CARES Act does allow people to take a penalty-free withdrawal or loan against a retirement account. That being said, I always like to say, think about that. Think about, is that going to be the best choice for you? Sometimes financial institutions will allow you to take out a short-term loan at a very favorable interest rate to avoid taking that money out of a retirement account, which is really a long-term investment. Or, you might just have to take a temporary, although we don't encourage this in a non-pandemic environment, maybe stop contributing to the 403b for a couple of months till you get back on your feet, and then regain those contributions. If you're faced with, here's two choices that I have: take money from my retirement account or stop contributing for a couple of months. Choose the better of the bad choices. Those are never going to be advice that we would give necessarily in a non-pandemic environment, but in a time of crisis, sometimes we just have to make the best bad choice. And again, there's a couple of articles here that I would refer you to about how much savings should you have. We've talked a little bit about that, but there's some more in-depth information looking at these articles. Nikki, what other advice would you give when it comes to savings during a pandemic?
I mean, I think this hit everybody kind of hard and nobody was prepared for it, obviously, but I always talk about just making sure that if you are working with your budget, to set aside a little bit each week. I have a lot of clients that don't have savings accounts, and they say, well, I can't afford to have a savings account, or I don't have enough money to put aside. So I kind of just test it out with them and just do, $1 a day or $5 a week. And then I check in with them every week and say, okay, so how did that work? Do you feel like you missed that $5? And most of the time I get, well, no, I didn't even notice it was gone. So then we up it the next week to $10 and so on. And so each week that I check in, I have a client specifically that we got to $100 a week eventually. And now she actually has a good size savings. And she's like, you know what? I don't even miss that $100 a week. I probably was spending it on soda and coffee. So, things that you don't realize where your money's going, if you just slowly start putting it aside, it really adds up quickly, so that when you have an emergency like this, you have that savings set aside that you can use if you need it.
Great. Absolutely. I love that. It's funny how money just sort of trickles away. You don't really notice where it's going. But it's fun. I'm not just saying this because I'm a banker. It's fun to see it grow in the savings account. So it can almost be a little bit addictive once you start to see it grow. So managing debt. Managing debt has been a really hot topic these days because everyone's wondering, if I can't make my debt payments, what options are available for me? And is now a good time to refinance? I'm hearing that their interest rates are really, really low. Should I be taking advantage of that? Should I not be taking advantage of that? So again, we have some great articles here. I would say, back to pre-pandemic and pandemic advice, first step of managing your debt is understanding what you owe, right? Having that clear picture of what is my debt, thinking of debt, what could I actually eliminate? When would I consider myself to be debt free? So when you're making your list of what you owe, you're going to include everything from the mortgage, the car payment, to the medical bills that I'm paying, $5 a month on, because you want to have a really clear picture of your debt and how it's structured, and really focus on there's good debt and there's bad debt. Really start to focus on the bad debt first. Things like credit cards. Actually, auto loans are considered bad debt because typically cars depreciate in value. So they are another one that it's more important to make aggressive payments, especially if they're higher interest rates. Any collection accounts are certainly considered bad debt. But really, step one is writing down what you owe. Step two is, again, back to that budget, determining what you can realistically afford to pay. And this is that 20%. This is that 50, 30, 20. The extra payments on the debt are what you're going to determine what you can realistically afford. And then, take out your necessities, those things that you have to have in that 50%, that those are non-negotiable, and what's left over is what you apply to your balances. Now, in a pandemic, I think I mentioned before, managing debt might be a little bit different. So if you are a person that has one credit card and you have been paying, an extra $200 on that credit card up until this point as part of your budget, as part of your process, but now all of a sudden you're finding it's tight to meet your necessities, it might make sense right now just to reduce that extra payment by a little bit to alleviate some of your stress in your life. And then once we're through this time, or we're through this hiccup, we reassess or maybe even look at a consolidation. Consolidations, my dogs are going to bark more today than ever. Apologize for that. Consolidations are really, really popular right now. Excuse me one second. Consolidations are really popular right now, especially if you're a homeowner. Home interest rates have never been lower. I've seen some rates below 3%, and Nikki can probably tell us, what she's seeing on a day-to-day basis. But there are ways that you can refinance a home without closing costs, without having that extra out-of-pocket expense. So if you're thinking, well, I would love to refinance my home, but I don't have money for closing costs, that might not be a barrier for you. You'd want to seek out some information regarding different products that are available out in the marketplace that can accomplish that goal. And I would encourage you to kind of shop that around and make sure you're getting the best deal. The one thing I would say about managing debt is some folks, now that we're kind of a couple of months into this, some folks have taken advantage of some hardship type programs and have had payments delayed. And one important thing to note is that if you have taken advantage of some of those hardship programs, your lender might require you to at least make one current payment in order to qualify for a type of consolidation or refinance loan. But you won't know unless you ask the question. So if this is something you're considering, you may want to go ahead and ask the question before you take advantage of a deferral, like a 90-day deferral option or some other type of forbearance option on a loan. Nikki, can you, give us a little bit more of your insight from a branch perspective on what you've seen for folks in managing their debt?
So recently, with the pandemic going on, we have a lot of people that either don't want to ask the question because they're embarrassed or because they think the answer is no. But when all of this started, I started reaching out to all of my my clients that I have and just kind of checked in because, like I said, a lot of times people won't ask. But a lot of things that I was seeing is, well, I have these multiple car payments, or I also have my mortgage and my student loans. And we were able to help them, whether it be, doing a deferral, having them, do a review over the phone so that I can really dig deep with them and see what we can do to help. And it might just be something as simple as looking at their finances and saying, okay, well, don't do this right now, but do this, or pay the extra here and pay a little bit less here because it's going to make more sense in the long run. And we have had a lot of debt consolidation conversations that have led into the debt consolidation loan, which has helped a lot of people save a lot of money.
Great, thanks. Can you, not to put you on the spot, I don't want you to quote an interest rate, but what are you seeing right now for interest rates on mortgages and consolidation loans? What would someone maybe expect if they were to shop something like this out?
Yeah, so mortgage loans are really low right now. I would say anywhere from, goodness, especially with relationship rates and everything like that, or the key at work rates, anywhere probably from 2.75 to 3.25. Of course, it could be lower than that as well, but I hate to quote lower and then have it not be that when someone calls. But a lot goes into it, as I'm sure you know, your income and everything like that. But rates are very low. I will tell you that I have shopped around just because I'm curious as well. Pretty much KeyBank beats everybody around. So it's a
Oh,
good time
nice.
to finance. Yeah.
What
Are
about
these
personal
for
loans?
fixed rate mortgages or are these for like a variable rate?
So we do both, but specifically the fixed rate mortgage right now is really low. And a lot of people, like I said, they don't know, so they won't ask, and they just say, well, like Michelle was saying, I can't afford the closing costs. But there's a lot of options out there that Key offers, so if you don't ask, you won't know. But rates are very low. Even if you do, a home equity loan because you're trying to, extend out a term because you need to, lessen your payments again or something, we can help.
Great, thank you.
Sure.
We actually, I'm glad that you said that. We've actually seen some people actually want to speed up their retirement during this time. So some people have said, you know what, I'm done. I'm not going to work during, the conditions that we're in. And I was 5 years from retirement. I think now, want to see what I can do right now. And so sometimes a refinance might make that a possibility because you free up enough money within that budget that you can actually afford, maybe a smaller payment over a longer period of time. So depending on what your goal is, we all have different strategies that we recommend. So I mentioned we were going to talk about protecting yourself from fraud and identity theft. I'm not going to spend a whole lot of time on this, but it's just a good reminder. Anytime, it seems like times are hard, the fraudsters work even harder. And so we've seen a little bit more of an uptick in fraudulent activity over the course of the last few months. So just a few good reminders here. Change your passwords. If you haven't changed your passwords in the last 6 months, now's a good time to change your password. When we're talking about passwords, you should, we don't recommend that you have the same password for multiple accounts. And I know a lot of people do that for simplicity's sake. They don't want to have to, go through a spreadsheet in order to figure out what a password is for a certain application. But at least keep your email passwords and your Netflix passwords separate from your bank account passwords. It's much easier to access and gain an email password if you're someone that's perpetuating fraud than a password on an encrypted site from a financial institution. But if you have the same password for your email as you do for your financial institution, someone finds out your email password, they might type it into the financial institution and see if that one works there too. So it's just a good best practice to keep those really separate if you can. Your financial password should really be much more complex and confidential than other passwords that you might have out there. Let's say for your, like I keep saying Amazon, but Amazon is another example, or Netflix or anything like that. In addition to that, there's been several scams with emails going around where you receive an email, it looks like a company you do business with, you click on a link and it asks you to update your information. You never want to do that. Unless you're expecting an email from someone that has a link, you shouldn't ever click on, a link, especially if it's requiring you to update information. If you're not sure, PayPal is a company that I recently got an email from. I'm not going to click on the email that PayPal sent me to update my information, but I might go out to PayPal's website. If by typing it in the normal way and making sure that my information has not been compromised and doesn't need to be updated. Or maybe I'll change my password at that point anyway if I'm doing it kind of on my own. But there's so much that folks can do with technology now. I can set up or anyone can set up a URL link and make it look like it came from a reputable company. You've probably seen it, you can get a phone call and it looks like it's coming from a local number, and it's really not. It's coming from, who knows where it's coming from. So never trust caller ID, and never trust links that you get in emails, especially if they're unsolicited. Nikki, anything to add on that?
I mean, I think the amount of fraud that I see on a daily basis blows my mind. It's scary, the things that people can come up with. I always tell people that if it's not a call from somebody that you recognize, don't answer it, let it go to voicemail, see what it was about. Don't ever click a link. Don't ever put your social or your account number in anywhere unless it's something that you initiated, that you know exactly what it is. And we've had people call and say, oh, I got a call from, I think, KeyBank, but they wanted to know this and that. So I always say, if you get a call from KeyBank or another business and you're not expecting that call, hang up and call back and see if they just tried to call you.
And don't call back the number on the caller ID.
Correct.
Call a number that you verified. Good advice. All right. So what should you do if you're having financial difficulties? We've talked about this a little bit, but just want to reinforce that there is so much that's going on and so much that's changing in the world. It's constantly changing. In the beginning of the pandemic, car insurance companies were saying, don't even call me, we're going to give you a credit on your auto premium. Student loan, if you have student loans, you know that the government loans were all placed into forbearance at a 0% interest rate, and that was scheduled to last until September. I believe that's been extended at this point through the end of the year. So oftentimes I get the question, well, is now a good time to refinance my student loans? Maybe, maybe not. If it's at 0% forbearance and you can make payments on it that are going to go straight to the bottom line, if you can afford to make those payments right now, that might be a better use of your money than trying to save a little bit of money on the interest rate in today's low interest rate environment. If you have private loans, those can be a different story. There are some reputable companies out there that can help you refinance your private loans. But again, make sure you understand the terms if you're refinancing private loans, and make sure you're not giving up anything. If you also, be aware when it comes to student loan refinancing that you wouldn't want to give up any potential loan forgiveness that you might qualify for. So that's something else to kind of think about when you're thinking about your student loans. But the message here is, if you're having trouble, it might seem like it's embarrassing, or it might seem like it's going to be a lot of work. But the best advice we can give you is to pick up the phone and contact the companies that you do business with, and do it before it gets bad. Do it before you're in a difficult position where maybe your payment's going to go 30 days late, or you're faced with not being able to get the things that you need for your family. If you feel like there's any issue, call them, ask what they can do for help. Maybe they can help, maybe they can't, but there may be programs out there that companies aren't advertising, but if you ask for the help, they'll give it to you. I know early on in the pandemic, we were waiving overdraft fees, I think, for everybody, and we were not charging late fees, and we were offering, deferrals on obligations. Some of those are still options, some of them aren't, but again, it's worth asking the question, and don't be embarrassed. It's one of those things where financial professionals, cell phone companies, it's a conversation that folks are used to having, employees of these businesses. So, go ahead and make the call and see what you can do to get help. Nikki, anything to add there?
No, I think you hit it straight on. I mean, a lot of people, when it comes to finances, don't want to talk about it because they're embarrassed. But if you don't ask, you won't know. And like you said, it's something that we're used to talking about all the time, and it's something that's normal. And it's something that, I enjoy doing, is helping people that call and say, oh my goodness, I don't know what happened. I had checks bounce and all these overdrafts, and, they're in tears. And it's my job really to sit down with them and make it better. So.
Yes. And I know I just called my cell phone company and got a better deal on my cell phone. And it wasn't because of a hardship. It was because I wanted to save money on my cell
Yeah.
phone. So, just, you don't have to be in a hardship to ask for help either. It's okay to ask. If you call oftentimes if you call your credit card issuer and you just say, hey, I'm a good customer, can you lower my interest rate? Sometimes they will, especially if they don't want to lose your business. So I know it takes some effort to make that phone call, but it definitely can really make a difference in the long run. So the next thing that we have here, and this again is going to be sent out for your review, but we put together kind of a library of some different articles and resources. And these aren't, necessarily all KeyBank articles. I think actually only one of them is a KeyBank article. The rest of them are NerdWallet or ABC News. But we sort of, kind of scrubbed at the beginning of the pandemic and said, what's really good advice, and how do we get this advice out to the companies that we work with and their employees? So we put together this library of resources, and it's everything from, what do you do if you can't pay your mortgage, to how do I take advantage of this, volatile market, and is there a way that maybe I can benefit from this in the long run? So I won't go through all of the details, but I would encourage you, if there's topics here that interest you, click on the article, give it a read, and hopefully, make some changes based on the advice that you see in these little snips. And then we did also want to provide you with some resources. There are some KeyBank resources that we included. If you click on that link, you'll be taken to a page which has a 3-minute plan you can click on and kind of do a little mini self-assessment on your own. The information doesn't go anywhere. It's just for you to use. You can also read KeyBank articles about various financial topics. And so that's available to you. And you can schedule an appointment there if you did want to schedule an appointment outside of scheduling through myself and Nikki. There is the ability for you to do that through that link. The Maine Equal Justice is a nonprofit, and they, when I was looking for articles, I found that they have a lot of great information around resources that were available in Maine for the benefit of the state. In addition to that, 211 Maine can provide you with referrals, if you will, to if you just need somebody to talk to, because you're dealing with things that you can't talk to your family and friends about, or if you just need to be redirected to another resource local here in Maine. So I did want to include that. And then the last link that I included was the Finance Authority of Maine COVID resources. And on that site, you'll find information about resources that are available to small businesses in Maine, consumers in Maine, and then there's also some great information there regarding education and how to navigate that situation. So again, this will be emailed out to you so that you have access to review it at your leisure. And if you have questions, we are here as well as an additional resource. So I left, I had asked Nikki to kind of share a story just to kind of round us out before we open it up for questions. And please feel free, to put any questions that you have in the chat, comments that you have in the chat, or speak up. And, don't be afraid to ask a question for your coworker. It doesn't necessarily have to be your individual question that you have. Maybe you have a question for your kids, or maybe you have a question for your parents. Feel free to ask the question, because I think we can all benefit from hearing, what is on people's minds, if it's anything different than we've talked about today. But Nikki, can you, while we're kind of teeing up questions, can you kind of share a story of someone that you've recently helped, during this time?
So I, within the past couple months, had a client that was kind of back and forth between jobs. When COVID hit, she was told that her hours were going to go from 30 down to about 10. So that put her in a position where she wasn't making the same kind of income. She didn't know what to do. She was overdrawing her account, didn't understand where her money was going. She called me and said, I don't know what to do. What's going on? My account's overdrawn. Can you look into it? So I suggested that she come in. We have the safety measures in place. So she came in, we sat down. I had her pull up her online banking, and we really dug into everything she was spending her money on. Even before that, I'm huge on pen and paper still. So before I even had her do that, I had her pull out pen and paper, make a list of where she thought her money was going and what she thought she was spending money on for bills. And then we put it next to the online banking piece, and it was really different. And I kind of joked with her and said, okay, so the things that you didn't write on the paper, do you think you didn't write them because you didn't want to talk about that's where you were spending your money, or you just really didn't realize you were spending that much money there? It was a little bit of both. We talked about the different expenses that she had that maybe weren't needs and were more wants. We checked off the list 2 things that she felt like she could get rid of, and the items that she was spending money on and how much she was spending money on. We opened up a savings and had her start putting the money there. Even though she had less hours with work and she left that job in between and had to go to a different job, we were able to start that small savings, even though it was very small. She was able to really see where her money was going so that she knew what she could cut back on. One of them was a gaming app. So while she was here, lots of money on it. So while she was here, she deleted it with me. We talked about the importance. Some people, it's very important. Maybe that's an outlet you need to de-stress at the end of the day, but she felt like something else that she wanted to spend her money on was more important. So we got rid of the app. We started putting that money in a savings account. And she, I check in with her once a month, and she's not as stressed. She's getting her savings account built up. But I mean, really, we went from she didn't know where her money was going. She didn't have any type of savings to now she's kind of got things more under control and she's saving more. So.
Great. That's a great story. I know I find it a little scary sometimes when I look at my spending. There are things that you just don't want to admit that you spend your money on. And so if you avoid it, it's like it didn't happen, right? Right? Absolutely. So good. All right. So does anyone have any thoughts or questions that we can answer before we wrap up? It looks like we have a question in the chat. So it says, can you tell me what is the best way to pay down on my credit cards and how high of a balance I can have? So I guess you're asking like strategies for paying down credit card debts if you have more than one, and how much maybe you're utilizing of your credit lines. What's a good percentage? Nikki, do you want to take a stab at answering that question for us?
I honestly, I don't know the exact percentage, but I would say if you have the multiple credit cards, my biggest suggestion is to look at what your highest interest rate cards are and pay those down first, because that's where what's hurting you the most. If you can make more than your minimum balance payments on those, definitely do that. I know we talked a lot about during a hardship, it might be harder to do something like that, but always make sure you're at least paying the minimum balances. I don't know if that really answers that, or if you want to add to that, Michelle.
Yeah, I mean, I think that's good advice. I think, it's sometimes it just comes down to yourself better than anyone, and what you're going to stick with is going to be almost as important as, does it make the most financial sense? When I do the managing your debt class, if you will, I talk about, 3 different strategies. I talk about, what you just said, looking at your interest rates, and are you motivated by money, and is, getting rid of some of that interest going to keep you going on your plan? Or are you a person that's going to need a little bit more instant gratification, and maybe a snowball strategy might work good for someone? I'm a snowball strategy person, which means you pay all your extra payments on the lowest balance so that it's gone, and then it's gone, and you celebrate that. And then there's, the third strategy. It's looking at consolidation and saying, okay, I've got 3 credit cards. They're all at 19%. What would an unsecured personal loan look like? And, maybe it's 9-10%, but that's a lot better than 19% of my credit cards. And I'm not going to re-access that. I'm not going to get myself back into, the same place that I was before. And then, thinking of credit scores, I usually say, you don't want to utilize more than 30% of your available lines. So thinking to, we talked about preventing fraud and, protecting yourself from identity theft. Sometimes people will say, well, I'm going to reduce my credit limits because I want to reduce that exposure. But if you reduce them down too low and you show as being overutilized on your credit, that can have a negative impact to your credit score. So that was a lot of answers in one little question, but I hope that answered your question. And so I'm just going to take a look and see. It looks like
What do you guys think about signing up for like a credit card that has a 0 interest rate for so many months and a low balance transfer fee in order to kind of consolidate your credit cards and pay it off without paying so much interest?
So I am a big fan of 0%. I love 0%, and I think it almost always makes sense to pay the transfer fee, especially if you're at a higher interest rate, to get to where you want to be. But I would caution someone who's using the 0% strategy as their only strategy. And the reason I say that is because it's in your head. You're like, well, I'm not paying any interest on this, so I can, do this other thing. And most often what I see is that people tend to roll 0% cards to 0% cards to 0% cards, and their balances might actually increase over time because they're feeling like they're getting this good deal that they're at 0%. So my advice would be get the 0% card if you have, something that you're paying on that has, consolidate your credit cards on the 0% and maybe, tackle a higher interest debt and let that balance kind of sit there at minimum payments at 0 for a while you're reducing maybe the balance that you owe on a personal loan. So seems like it's kind of backwards, but again, I love the 0%, but just not as my only strategy. Nikki, would you add anything to that, or do you have any different thoughts?
No, I think you hit that straight on. I mean, a lot of people, like you said, will see the 0% and be like, oh, that's amazing. But then they get themselves back in a bad situation because they're looking at the 0% saying, well, I can buy that because I'm not going to pay any interest on it. And then they don't end up paying it.
Right.
It's
Right.
important to be very careful with that.
Yes. So I do have a private question in the chat. It says, if you have a low credit score, how can you improve your credit easily without getting credit cards? And that is a good question. So it depends on what's driving your low credit score. You can have never had credit in your life and can you guys hear me?
Mhm.
Okay, someone told me they just lost audio, so I was worried that everyone lost audio. So you can have a low credit score because you don't have any credit, or you can have a low credit score because there's negative things showing up on your credit. So my advice, first and foremost, is to get a copy of your credit report. Go to annualcreditreport.com. It's free. You're not going to get your credit score. That doesn't matter, really, if you're just trying to figure out what are the steps that you need to take in order to get a better credit score. And have a conversation where we can have a conversation with you about what's going on with your credit. Sometimes it's you just don't have enough credit, and actually taking on more credit is a way to improve your credit score. One way that KeyBank has to do that is a program called Loan Assist. It's not a credit card. You basically apply for a loan based on an amount you can afford, and we approve the loan. You sign loan paperwork, but we put the proceeds of the loan into a savings account that you can't touch. It actually has a hold on it until the loan's paid back. And so you make payments on the loan over time to show that you can be responsible making those payments. Once the loan's paid in full, the hold is released from the savings account, and now you have money sitting in a savings account that you didn't have, and you have a period of time that you've had positive credit history reported to your credit bureau. So that's one way that you can build your credit if you just don't have a lot of credit. I did that with my kids, both day they turned 18, not the day they turned 18, but as soon as they turned 18, they got this loan assist so that, they could show that they were making responsible payments. And my older son ended up using it to pay some of his college tuition once that, money became available in the savings account. So that's one way that you can build credit. But there are other ways, that may even be simpler. It really just depends on what's on your credit report. But if you've been doing everything that you know how to do and it's not improving, seek the advice of a professional. We can help. We've seen it all. Some of us have been through it all. Life happens. And the great thing about credit is that you're never stuck. You're never, even if your credit score's, 400, it doesn't have to last forever. In fact, it can, if you make some small tweaks, it can actually improve itself pretty quickly. I was talking with a lady yesterday, her credit score went up just over 100 points by making one small change. And it was paying off a collection account. So, those are some things that you can do. So I hope that answered your question. And, otherwise, feel free to reach out to me directly, and we can talk about it further. And then someone just asked in the chat, what was that website? It's annualcreditreport.com. And if you go there, you will have access to all 3 credit bureaus. It's important that you look at all 3 because something might be reporting on one that's not reporting on another one. And it is going to ask you to verify some pretty strange information, if you will. It might ask you, what kind of car did you have in 1982? And it's going to give you some options. So be prepared for some strange questions, but they're all just to verify that the right person is accessing the information and that your information isn't being given to someone that shouldn't have access to it. So I hope that answered your question. And let's take a look and see if we have any other questions. Or you can feel free to take yourself off mute if you'd rather not chat. Completely fine. All right, so looks like we might have one more coming through. So while we're waiting on that, Nikki, anything else that we had talked about that we haven't shared on this call that we wanted to make sure that we talked about?
I think so. I think you covered everything.
Okay, good. All right. So we'll take the one last question. It says, will that show my credit score too? Oh, okay. If not, what would you recommend to see my actual credit score? Great question. So annualcreditreport.com, if you pay for it, it will give you your credit score. I don't recommend paying for your credit score. There are many different places that you can actually get your credit score at no cost. KeyBank has a way they'll give you your credit score. If you have a credit card with us, you can get an updated credit score. Discover allows you to get an updated credit score, whether you have an account with them or not. The one thing I would say about anytime you're getting your credit score from a resource that's not actually applying for a loan, you will expect, or you should expect, to see a difference in the score that you get online versus the score that the bank's going to pull. And the reason for that in a lot of cases is banks sometimes have a preferred credit bureau that they use. So if you apply through KeyBank, we're going to pull Equifax. We don't care what's on TransUnion. Equifax is the bureau that we use. Also, we use a FICO score as opposed to it's called a Vantage score. It uses all of the same components. It uses all of the same, payments on time, credit utilization, all of that good stuff. But the percentages are weighted differently depending on the credit score type that's being pulled. And it could be different from if you're applying for a credit card or you're applying for a mortgage. So that's why I say the credit score itself is just a number, and it's going to change tomorrow maybe. It changes all the time. So what's more important is that you know what's on your credit report, you know how you're utilizing your revolving credit accounts, you keep a long established credit history, you don't close accounts that you've had for a long time unless there's a real reason to do that. You make your payments on time, and eliminate any collection accounts that you might have. That's the best advice that I would give, is don't worry about the score. The score, once you reach a certain point, it's a matter of the interest rate that you gain or that you get. The better your credit score, usually the better interest rate that you get. And we can help you you can take steps to improve your score without necessarily knowing that number. So hopefully that answers your question. Good question. Thank you. All right. Well, we are just about at an hour, so I want to be respectful of everyone's time. I want to thank you for joining. I hope you found this information helpful. Again, we're here for you as a resource. Sorry we can't see each other in person right now, at least for this call. Hopefully someday we'll be back there. Thank you for all of the work that you're doing. I know you certainly don't have the easiest jobs in the world right now, and so we just want to be there for you in any way that we can. And with that, I will turn it over to Nikki or Joanna for any other closing thoughts.
Thank you very much. It was very informative, and I look forward to seeing you guys back here in 2 weeks.
Great. Thank you.
Yeah, if I can add anything, I would just say, I know we talked a lot about, reaching out if you need help, but I encourage everybody to reach out even if you don't need help, because I so would like to sit down with you and kind of review everything with you so that if you ever get to a situation where you are going to need help, you'll be prepared.
Good advice. Good advice, Nikki. Well, thank you again. Enjoy the rest of your day, and we will talk again in a couple of weeks.
Okay, thank you.
Thank you.